Hello viewers and welcome to the next episode of UAE Corporate Tax podcast series. In this episode, we will try to cover the transfer pricing guidelines of the UAE, which resemble largely with the OECD TP Guidelines of 2022. So there are 4 articles that deal with transfer pricing in the UAE corporate tax. The first article is Article 34 that deals with arm's length principle. Next is Article 35 that defines related parties and controls. The third one being Article 36 that defines the transactions with connected persons. Last one being Article 55 that talks about the TP documentation. In this episode, we'll discuss Article 34 that is the arm's length principle in detail. So typically, the TP provisions apply on the cross-border transactions between related parties. However, from the UAE TP guidelines, it can be observed that these guidelines are applicable broadly on all the transactions between related party and connected person. Also, these transactions apply to all types of entities like a corporation, a partnership, a trust, and any other entity as well. A transaction between related parties is considered at arm's length when it yields the same results as it would have yielded if it was entered between unrelated parties. Further, the Article 34 of the UAE corporate tax has given the complete powers to the FTA to reallocate income or expenses among the related parties in order to show the correct taxable income of both the entities. The TP rules seek to ensure that the related party transaction has been at the arm's length price, as we have discussed earlier. So, the TP guidelines give 5 methods from which the arm's length price could be calculated. The first being the cup method, that is the comparable uncontrolled price method. Second is the RPM, that is the resale price method. Third is the CPM, that is also called the cost plus method. The fourth is the profit split method, that is called PSM. And the last one being the transactional net margin method, also called TNMM. The guidelines do not give any priority or preference in which these methods have to be used to calculate the arm's length price. However, the comparability analysis have to be done in order to select the most appropriate method for benchmarking. The comparability analysis considers the factors like the functions performed, the assets involved, the risk undertaken, the economic circumstances, and the contractual terms. In a situation when the related party transaction is not at the arm's length, a relative adjustment has to be made to the price of the taxable person. However, the unique feature in UAE TP guidelines is that a corresponding adjustment is also made in the related party's income in order to arrive at the right taxable income for both the parties in the transaction. Thank you for watching, and we'll discuss the further provisions of TP guidelines of the UAE in the further episodes. Thank you very much.